Okay, so we're going to look at income tax in this section. And for most of the remainder of the chapter, we're going to focus on income tax. It's a little bit more rich in how you calculate things and how you go about doing things. So, basically, as most of us know, the income tax is the amount that the government is going to take, or you're going to have to give the government, based on how much money you made. Now, it is percentage based in one sense. However, it's not the actual standard multiplier, so it's not a straight multiplier. In the United States, we have something called the progressive tax system. And let me just give you a couple points of the progressive tax system. First off, it is the U.S. tax system. So it's the tax system that we do on our income taxes. Secondly, the basic assumption, the basic premise is that the more money that you make, then the higher percentage you pay, up to a certain percentage, of course. So the more money you make, then the higher percentage you pay. But it's also unique in that when we say a higher percentage, that higher percentages are only getting assessed on the higher portions of your income. So we're going to do an example to stress those points. So there's 3 points of the progressive tax system. 1, that it's the U.S. tax system. 2, the more you make, the higher percentage you pay. And 3, that higher percentage is only on the new or the higher portions of income. So here's how it works. Here is the single tax bracket. This is for the year 2014. You see this in your guided notes, and the sources in your guided notes, although it's not on this slide. So basically, if you're a single person, you'd file this tax bracket, and it says that if you don't make over 9,000, then the tax is 10%. So if you made 8,000, it's 10% on that 8,000. Now, if you do make over 9,000, and let's just say for 20,000, what's going to happen is you're going to have to pay $907.50 plus 15% of the excess over 9,000. Now, if you think about that, what's actually happening is that $907.50 is really the 10% tax on the first 9,000. So it's only after the 9,000 that the 15% is applied. And 15% is applied from anywhere from 9,000 to 36,900. After 36,900, well, your first 9,000 got taxed at 10%. From 9,000 to 36,900 got taxed at 15%. That totals up to $5,081.25. And then anything over that 36,900 is taxed at 25%. So you can see here that it's not a standard multiplier. I mean, there's multipliers in each of these tax brackets. But again, as you get higher, the multipliers get higher up until you get to 39.6%. However, that 39.6% is only the percentage you pay in taxes over $406,000. Okay? So that's how the tax bracket works. And we're going to calculate some taxes here in just a second. All right, so you're going to need the again, the guided notes, the tax brackets. You're going to have to refer to that a lot. And by the way, on the test, I'm going to provide those tax brackets for you. Those are obviously things you do not have to memorize. So, in this example, a single person makes $50,000 of taxable income. And we ask, what would their income tax be? All right, now, we're always going to assume sort of simple situations. There are more complex situations where some of your money is not taxed and some of it's taxed at a different rate. And if it's capital gains, it's taxed at another different rate. But we're going to always assume whatever numbers I give you, if I say they're taxable income, all of it's taxable, and it'll line up just with the tax brackets. So what that means, since this is a single person, okay, we look on our tax bracket, and 50,000 falls above 36,900, but it's less than 89,350. So what I have to do is I have to start out by finding the difference between 50,000. That didn't show up very well. So the difference between 50,000 and 36,900. 50,000 minus 36,900. Type that in your calculator. Should get 13,100. So that's the amount in excess. So what this tax says is your income tax, since we're in the 36,900 to 89,350, your income tax is going to be this $5,081.25. That's basically the tax on the first 36,900. And then you have to add on 25%, 0.25, of the excess, the amount over 36,900. So that we know the amount over 36,900 is 13,100. So the tax is 5,081.25 plus 0.25 times 13,100. And so the total tax would be $8,356.25. And there you go. Okay? So by the way, that's what you're always going to have to do. You're always going to have to figure out which bracket you're in. Find the difference between the amount of income that you have minus the minimum amount in that bracket. That's going to be a difference. And you're always going to have some number plus a percentage times the amount over whatever the lowest amount in your bracket is. Now, what we are going to do is we're going to say, okay, we figured out that the tax that we have, all right, in this example, gave us that we needed to pay $8,356.25. That was how much tax we paid. Tax. So we can ask some sort of follow-up questions based on that, okay? So if you had a taxable income of $50,000, we just calculated that about $8,000 of that you're going to have to pay to the government. So what's the amount you're going to bring home? Again, we're going to assume that you bring home the entire remainder. Okay. So technically, you made $50,000, but you brought back $41,643.75. Okay. And what's the actual percentage of income that you pay in taxes? Well, the way we calculate it is you take that 8356.25, divide it by your actual income, 8356.25 divided by 50,000. Now, when you want to get a percent, obviously you times it by 100. And you get 16.7125. I'm going to round that to 2 decimal places like I always do. Percent. Okay? So basically 16%. So even though you were in a 25% category, because the first amount is taxed at 10% and the second amount is taxed at 15%, and the third category is 25%, a lot of your income fell into the 10 and the 15 slots. And only about 13,000 fell into the 25. So your actual percentage of income that you paid in taxes was 16.71%. All right, so I want you to try this one. Figure out if the single person makes $500,000 of taxable income, what would their income tax be? Take a push pause on this video, take a few moments, and then come back and see if you get the right answer. Alright, so hopefully you did that. And I'll do this fairly quick as I go and write this. So if you made $500,000 and that means you are in the very top category. So the very top category is the 39.6% category, or the over 406,750 category. Okay. So you've made, $93,250 over the 406,750. So what this says is that you need to pay $118,118.75 plus 39.6%, 0.396 of the amount in excess, 93,250. All right. So type that into your calculator. 118.75 plus 0.396 is a 9, although it kind of looks like a 4 here, times 93,250. So the amount of tax that you would pay to the federal government is $155,045.75. All right, so we saw that 155,000 roughly dollars was our tax. Let me write that down again. Our tax was 155,000 $45.75. So that means you would bring home roughly $344,954.25. And what's the actual percentage? We'll take that 155,000, divide it by your amount of income. If you want to get a decimal, then you have to multiply it by 100. And so I got roughly 31.01%. Again, if you round this to 2 decimal places. So you see, as we made more money, we did pay a higher percentage on our taxes. And this is in general the case. So as you gain more money, you're going to pay a higher percentage on your taxes. But again, the higher percentage only applies to the excess money. Okay, so still that first 9,000 is still 10%, just like it was when we made 50,000, and still that 9,000 to 36,000, still that's 15%. Okay, and so that's how the progressive tax system works. Now, one thing you should know is the following. There are different tax brackets for different marital statuses. Okay? So the first two of those we looked at were were for single people. And single people always have to file individually. However, married couples have a choice. They can either file jointly or separately. Okay, we'll talk about filing jointly later, but let's just say instead of being a single person, let's say I'm married and I want to file my own taxes. So let's see if a married person files separately. So I'm filing as an individual, and I have $50,000 of taxable income. What would my income tax be? So here you have to go look on, again, the married filing separately. And if you look at this, all right, $50,000, that puts us in the over 36,900 again. So 50,000 minus 36,900. That's still 13,100 above 36,900. Okay? So what the tax tells me to do is take $5,081.25 and add on 25% of the excess above 36,900. So that's what my 13,100 is. Now, this all should be very familiar right now. And notice we get $8,356.25. Okay? So you might think, well, filing separately is really no different than filing singly. So if you're filing as a single person. So if you're married and filing separately, it really doesn't make any difference. And you'd be right at $50,000. All right? So at $50,000, like I said, we're right, and there's not a huge difference. The amount you bring home is still $41,643.75. All right. Now for the actual percentage, again, we take $8,356.25, divide it by my $50,000 worth the income I started at, and you once again times by 100 to get percent, 16.71%. And again, that looks very, very familiar because it, in fact, was the exact same amount that we had when we filed as a single person and when we made $50,000 as a single person. Okay? So what I'd like you to do on your own is calculate the following. If a person files separately and makes $500,000 of taxable income, what would their income tax be? So what would they have to pay in income taxes? Again, push pause, do it, and then in about 5 seconds I'll start talking about it. Now, what you should have noticed about the married filing separately is now the top amounts do differ, okay? So what we have to do is we have to calculate the difference between 500,000 and it was 400,000 and something when we were single. But now while we're married, it is $228,800. Okay? So wrote that down, but $228,800. So the amount over that 228 is $271,200. And since this is in the very top tax bracket, what we have to do on this tax form, or at least that's what it says, is to take 63,981.25 and add 39.6% of this $271,200. Okay, so 63,981.25 plus 0.396 times 271,200. So the amount of tax you would have to pay is $171,000, 376.45, which is a bit different from what we had earlier. So the question comes again now figure out what amount you bring home and what the actual percentage is. And again, push pause on the video and try to do this on your own, and then I'll come back and explain it. Alright, so you should have done that. And again, this is 500,000. We had 171,376.45. That's how much we have to pay in taxes if you make 500,000. And so that comes out to bringing home. So if you made 500,000, paid in 171,000 in taxes, you will get back 328,623.55. So $328,000 $623.55 is the amount you would have brought home. Again, this is just after federal taxes, and we're not including Social Security or all those other little things they take out of your paycheck. Now, as far as percentages go, take the 171,376, divide it by your 500,000, times this, by 100, and you'll see that the percentage is 34.28% if I round it to 2 decimal places, which is higher than which is a higher percentage than the person who filed as single. So let's kind of summarize what's going on here. So we're going to look at the actual taxes paid. And if you recall, again, I'm just going to fill this in, but if you had $50,000 of income, then if you filed singly, you got $8,356.25 that you had to pay in taxes, in federal income taxes. And it turned out that was no different if you were married and filed singly. Now, as a single person, if you made $500,000, then you would be paying $155.45. And if you married and filed separately, you would pay $171,376.45. Oops, that should be a decimal. Sorry, and that's a comma. All right. So, a little quick comparison is, if you are married and single, there's really no difference in taxes at the $50,000 mark, being married or being single. However, there is a significant difference at $500,000, being married and being single. Well, marriage induces an extra, about $15,000 to $20,000 worth of extra taxes you'd have to pay the government. So to be married in this situation would cost you a lot extra. And also the percentage that we paid, we can take a look at that. And when we do look at that, we see that as far as percentages go, again, it doesn't matter if we're single or married filing separately. At $50,000, we have 16.71% in both places. And it did matter if you filed single, you had a 31.01% federal tax burden. And if you were married filing separately, you had a 34.28% tax burden. Okay? So we can compare these situations and take a look at some interesting facts. We'll dig a little bit deeper into this phenomenon about having to pay more when you are married, and when you don't have to pay more, and so on. But not in this section. In this section, we're just calculating percentages and calculating how much tax you paid.